Today, we're talking about a massive, and I mean massive, shift that's happening right now in the world of investing. Artificial intelligence is completely rewriting the rules of the game, and honestly, it's happening a lot faster than most people think. And let's just start with this quote because it really sets the stage. This isn't some far-off prediction about the future. This is about right now. The whole point of this explainer is that the game has fundamentally changed, and the old tools, well, they just don't work the same way anymore. So what exactly is this disadvantage? Well, you can think of it as the AI investing gap. It's this growing canyon between investors who are using AI and those who are sticking to the old ways. And we need to break down why this gap is getting wider so quickly. And here's the heart of it. The scale is just mind-boggling. We're not talking about being a little faster or a bit more efficient. This is a completely different dimension of analysis. You know, a human investor might spend a week reading a few articles and one earnings report. An AI, it can scan millions of data points, everything from satellite photos of factory parking lots to global shipping data in literally the blink of an eye. Okay, that all sounds a little abstract, right? So let's make it super concrete with a perfect example, Nvidia. This story shows you everything you need to know about the difference between reacting to news and actually predicting a trend with hard data. While most of us were just starting to hear about things like ChatGPT, the big institutional AI models were already flagging some really interesting, not-so-obvious data. They weren't tracking AI hype on social media. No, they were tracking the plumbing, the real-world demand for the hardware that makes AI possible. They saw that surge in orders for data center GPUs and knew it was a massive signal for future growth, long before it ever hit the headlines. This slide just lays it out so clearly. On the left, you've got the AI. It's a detection engine. It's looking for the acceleration in the raw numbers. But on the right, well, that's the typical human approach, isn't it? It's a reaction engine, responding to news that has already happened, which means the opportunity is probably already gone. And then you have our biggest weakness, the one thing that gets us every time, emotion. Come on, we've all been there. We get scared and sell at the very bottom. We get greedy and chase a stock when it's already soaring. We get attached to a losing position. And AI does none of that. It's just cold, hard logic executing on a risk model it was given. And the tough truth is, in investing, emotion is a very expensive liability. Okay, but here's the twist, because if it were that simple, we'd all just hand our money over to a robot and call it a day, right? But it turns out AI has a huge blind spot. It's not some perfect, all-knowing oracle. So yeah, the slide asks the big question, and the answer is a huge, resounding no. The key here, the really important part, is understanding why it's not perfect, because that's how you figure out how to work with it instead of just trying to compete against it. You see, AI models are incredible at finding patterns and stuff that's already happened. But what happens when the entire rulebook for the market gets thrown out the window? That's what we call a regime shift. Think about a sudden, shocking change in interest rates or a global pandemic, a black swan event. These moments can totally break the models because there's just no historical data to tell them what to do. And this just nails it. Markets are not neat and tidy spreadsheets. They're messy. They are driven by fear, by greed, by wild ambition, and just plain irrationality. All the stuff that makes us human. An AI can calculate risk based on the past, but a human can understand context in a way a machine just can't. So where does that leave us? This whole thing brings us to the real solution. The future of smart investing isn't human versus machine, it's human with machine. It's all about building a hybrid approach that takes the very best from both worlds. And let's give this new role a name, the augmented investor. This isn't someone who blindly follows an algorithm, and it's not someone who ignores the unbelievable power of data. No, this is an investor who uses AI as the most powerful research assistant in history, but keeps the final strategic calls for their own human brain. This chart shows you exactly how that works. It's a division of labor. On the left, you let the AI do all the heavy lifting, sifting through mountains of data, flagging weird anomalies, and filtering thousands of stocks down to a handful of opportunities. Then you, the human, step in to do what you do best. You set the big picture strategy, you define your own comfort level with risk, and you think about the long term. But before we finish, there is one last crucial piece to this puzzle. We have to be really careful about the story we're all caught up in. Because the very excitement about AI, well, it's creating its own set of dangers we have to navigate. This is such a powerful idea to sit with. It is so easy to think that if a new technology is a total game changer, its stock can't possibly be overpriced. But that's just not true. Those two things can be true at the exact same time. AI is changing the world, but the prices of AI stocks can get completely detached from reality because of all that hype, creating a huge risk for investors. So we're going to leave you with this. The question isn't if AI will change investing, it's already done. The real question is for you, personally. This shift, it's not waiting around for anybody. It's happening right now. And that gap between the augmented investor and everyone else, it's just going to get wider. The choice is yours.